as valuable today. And the reason why that's the case is because it's not what's driving the market as much. Still going to drive the market, but not as much. And the reason for that is because what's driving the market today is month end and quarter end rebalancing. All the big funds do the rebalancing on their forex, on their stocks positions, their bond positions, their global macro positions, their oil positions, their energy positions. There's a lot of rebalancing taking place today, and that's obviously going to rotate the market a little bit more than you would expect. So when the price drops, the people that need to buy the product will buy the product and it will go back up. When the price rises, the people that need to sell the product will sell the product and the price will fall back down again, and we'll end up seeing probably a little bit more rotational business than we would ordinarily have expected based on perhaps the value that was evolving. So just please bear that in mind. Recently we've been talking about bonds against the 2s, 10s, 10s, 30s narrative, 2s, 5s, 5s, 10s, 10s, 30s narrative. We've been talking about the bottom edge on equities and oil in the last sort of half hour or so. I did give a shout to anybody that we were buying the bottom edge. We tweeted it out and we bought it and we made profits as usual. Bonds have been brilliant. We talked about that, as I said. There were very, very big swings on bonds still taking place, $1,000 swings on the ultra bond. Very, very, very profitable as well. We talked about the knob spread grail trade this morning. And we've been sell-side oil this morning as well. Very, very nice outcomes. Sell-side oil down from a high price of 75.40s down to 74s for $1,400 a contract. Huge, huge profits on that trade. Anyway, into the data we've seen this morning. We've got a lot of manufacturing PMIs in the overnight session. Chinese manufacturing PMIs disappointed, actually. It contracted at 49.6. However, their non-manufacturing beat expectations at 53.2 against 50 forecast. So that was the Chinese PMIs. Industrial production in Japan dropped by 3.2%. It was forecast to drop by 0.5, so that was a disappointing number. Into the UK session, the current account balance in the UK was a lot better than expected. It was expected to come out at a deficit of 15.8. It came in at 8.6, so a lot better than expected. UK final GDP numbers. Well, that surprised a lot of people to the upside, didn't it? UK quarter GDP numbers expected at 4.8, came in at 5.5%. Now remember, this is a quarter on quarter, so it's got a new baseline narrative. So the unlocking obviously has a lot to do with that. But it's still, even then, the number was known, the number was forecast, and it was very, very significantly beat this morning. And you can see obviously that sterling, whilst it's not been the most bullish because we've seen some dollar buyers coming into play as well, you can see that sterling from this morning's business, you'll see that sterling has been relatively neutral in a world where the dollar is actually appreciating. So perhaps an opportunity to start using that knowledge to buy sterling when the market is giving you opportunities to do so, because that was a good healthy GDP, print from the UK earlier on this morning. German CPI numbers always comes out in installments, of course, and therefore it's not the most clever number that we've ever seen. But as it came out slowly but surely, it was obviously apparent that we were going to miss very marginally. So German inflation month on month came in at 0. Looking elsewhere, French numbers came in disappointing as well, minus 0.2. German unemployment numbers were down at 30,000. 30,000. They were expecting a drop of 38,000. It only dropped 30. So again, very marginal indeed. Italian inflation also minus 0.1, and that's what we've seen so far this morning. 1:30, we have the US GDP numbers, Q on Q, forecast to come in obviously another very healthy 6.6%. Again, that's on a quarter basis, so you obviously are aware the US economy hasn't grown by 6.6%. This is a restarting point from a lockdown, so it's not as bullish a number as you would expect, but it's still, regardless, it's still a bullish number, and that's what we've always got to take on board. Any light is a good light at this stage. The unemployment claims expected to drop off a little bit from 350 to 330,000. We've also got this afternoon 245. We've got Chicago PMIs. We've got Powell back on the stand again this afternoon. Natural gas storage numbers as expected, and a few Fed members speaking as well. And these Fed meetings, these Fed's testimonies, these Fed speeches, they're very, very important just now because of the market's sensitivity to tapering. As they start to become more and more switched on to the idea of tapering, perhaps as soon as November, then the possibility is that it's going to make life for equity buyers very, very, very difficult indeed. And they're going to seek the relative yield safety of bonds, and therefore you might well see those people adjusting. So watch those Warren adjustments very carefully. Watch the liquidity adjustments in the quality spreads. Watch the price of volatility adjustments, and make sure you don't lose sight of what's going on in the background markets, guys. 3 key important critical points, the movement of those markets. So for me personally, I'm going to be very, very switched on to see if we can detect algorithmic buying and selling, because they're going to try and force people into really bad positions. It happened at the top edge of equities here, so we sold it, and it happened at the bottom edge of equities here, which I tweeted, and therefore we bought it, and we've managed to get ourselves into some great equity trades. And it also happened last night, in fact. So we saw a lot of algorithms trying to force sellers into the market, and it was brilliant, absolutely brilliant. So the liquidity hunters getting the liquidity, and then obviously I tweeted it out that we were buying equities, and that trade made over $1,000 as well. That was a live tweet if anybody was at the terminals about 1 o'clock this morning. It's been a good day. I hope you've enjoyed it. I certainly have, and hopefully this afternoon is every bit as good. So welcome in, guys. I'm going to grab a little bit of lunch. I'll be back in 10